Hey guys, welcome back. In this video, we'll be going over DCF modeling in Python. This is discounted cash flow models using just a Python script instead of an Excel file, basically. Plotting all of this using Matplotlib. Essentially, we go over the income statements, the cash flow statement, and the balance sheet of a company. We do projected cash flows on the company, the debt ratios, of course, return on investment capital, interest coverage ratio, EBITDA, gross profit and margins, valuations. But yeah, basically, instead of doing all of this in an Excel file where it would take me 2 hours for every stock that I want to analyze, I basically made a script that automates that process. So, and this is Carvana. I've been tracking it for a while. I don't understand why their stock has went up to 170. That's just crazy to me. And I found that their company is overvalued. So I just did some analysis on their future cash position based off of current data, and this is what I got out of it: a DCF analysis. It states that within the next 5 years, 1, 2, 3, 4, 5, the stock price will consistently drop due to cash flows. Now, the math has to be checked because I went based off of other people's models, not mine. But let's switch the stock to Apple, right? Let's close here. We will rebuild, basically building the program, installing dependencies and running it. So this is Apple, their stock price and future price projection, DCF analysis. Their current cash flow is in about, I think it's 1 trillion. Is that 500 million? Oh, $100 billion. Here, the return on equity, 2023, 09, 30, 2022, 2021. So every September 30th, the return on equity was about 42 for the past 2 years. The debt to equity ratio for the past 4 years was 0.5, 0.56. So the debt to equity ratio has dropped over the past few years. The price to earnings ratio is at 35. The interest coverage ratio is at 29. Gross profit margin is at 44%. That's not bad. That's not bad, to be honest. But basically, it states that future cash flows for Apple is not looking bad, but it's not looking very good. I don't know if there's much growth in their market. I mean, the smartphone market is pretty saturated. Everybody has a phone that they want, and selling $2,000 phones doesn't look like a good business model to me moving forward. But let's look at Carvana. So I'll go to CVNA. Let's close this. Let's rebuild it. Installing dependencies and modeling. The return on invested capital over the next few years is going to drop. I can see that happening because current price targets for Carvana are actually at 150 and the price is at 170. So doing some more research on Carvana. The reason why their stock, I think, is continuously going up, regardless of how high their debt is because interest rates have dropped. They dropped down to 4.75% to the 5% range in the light of progress on inflation. That means no matter how high the debt to equity ratio is, the company will be able to borrow money at a cheap rate. And I went to Yahoo Finance, and basically you go to their balance sheet. Total cash liquidity is about $1 billion, 962. Their debt to equity is 5,000%, 54 times. That's really high debt. That is why the cash position states that their future cash position is not looking very good. Basically, they are sitting on a lot of debt, and they have to get it off their books And that's why I think that insiders are selling their shares. But the thing is, these were already pre-proposed sales. If you go into the Edgar database in the SEC, go to Carvana. I was checking their report of proposed sales of securities. And this all started back in 2023 on 9/11. Going all the way until now, 9/27 was the last reported 144 form. But if you check the insider transactions on Carvana, or also on Yahoo Finance, but you can see that on October 1st, yesterday, no, 2 days ago, there was another sale of 100,000 shares. So because insiders are selling, I'm probably going to sell. That's just how I see things. But the market obviously doesn't feel that way because it's obviously been bullish for that period of time. So first thing tomorrow, I'm exiting this position. Yeah. If you like these videos, please subscribe. There will be more coming soon.